Have you ever looked around and wondered why some Americans seem to build massive wealth while you're stuck living paycheck to paycheck? You put in the hours, follow the rules, and still feel like the system is rigged against you. The truth is, it's not rigged. It's just that the wealthy are playing an entirely different game. They don't follow the conventional advice handed down by schools, parents, or even financial gurus on TV. Instead, they operate by unspoken rules that turn money into a tool for exponential growth. In this essay, we'll break down exactly why you're still struggling financially and how the rich keep getting richer in today's America. By the end, you'll have the mindset shift needed to rewrite your own financial story. The first rule the wealthy live by is that they see money completely differently than the average American. Most people view money as something to earn, spend, and hopefully save a little of for retirement. It's a means to pay the mortgage, buy groceries, and maybe take a vacation once a year. The rich, however, treat money as a dynamic asset that must work for them every single day. They understand that every dollar sitting idle in a low-interest checking account is actually losing value against inflation, which has hovered around 3 to 4% in recent years. Instead of chasing the next raise at their 9-to-5 job, they focus on making their existing capital generate passive returns. This fundamental shift in perspective is what separates those who accumulate wealth from those who merely survive month to month. Think about it. When was the last time you asked yourself how your money could multiply without you trading more hours for dollars? The wealthy ask that question constantly. They study cash flow, compound interest, and the time value of money like it's second nature. For example, while many Americans are busy paying off student loans that average over $30,000 per borrower, the rich are using similar debt strategically to acquire income-producing assets. This isn't about being greedy. It's about understanding that money is a resource that either works for you or against you. Once you adopt this mindset, your entire relationship with finances transforms from one of scarcity to one of abundance and opportunity. Another key difference lies in how the wealthy prioritize assets over mere income. The typical American chases a higher salary, believing that more money coming in each month will solve their problems. Yet data from the Federal Reserve shows that even households earning six figures often live with high debt and little net worth because they spend it all on liabilities. The rich, by contrast, obsess over building assets, things that put money into their pockets whether they clock in or not. Real estate, dividend-paying stocks, businesses, and intellectual property are the cornerstones of their portfolios. They know that true wealth comes from ownership, not from trading time for a paycheck. Consider the classic example of buying a home versus renting. Most middle-class families see their house as an expense and a place to live. The wealthy see it as a potential cash flow machine. They might purchase rental properties in growing markets like Texas or Florida, using the rent to cover the mortgage and generate profit. Over time, that equity builds while tenants essentially pay down the debt. Meanwhile, the average worker is still grinding away at a job, hoping for a 3% annual raise that barely keeps pace with rising costs. Shifting your focus from income statements to balance sheets is the game changer that separates the financially free from the financially trapped. This asset-first mentality extends into every area of life. The rich invest in their education not for a degree, but for skills that create scalable value. They launch side businesses or invest in startups, knowing that one successful venture can outweigh decades of salaried work. In America today, with gig economy platforms and online marketplaces, there's never been a better time to start thinking like an owner. Yet most people remain employees, trading their most valuable resource, time, for a fixed income that inflation quietly erodes year after year. The wealthy refuse to play that losing game. Risk is another area where the wealthy operate on a completely different level. While the average American is taught to avoid risk at all costs, stick with the safe 401k, buy index funds, and never gamble, the rich understand that calculated risk is the only path to outsized rewards. They don't take blind leaps. They study markets, analyze trends, and mitigate downsides through diversification and insurance. In the United States, where entrepreneurship drives innovation, those who embrace smart risk often reap the biggest rewards. Think of the tech founders in Silicon Valley or real estate investors who bought during the 2008 dip. They saw opportunity where others saw disaster. The fear of failure keeps millions of Americans on the sidelines, watching their neighbors build empires. But the wealthy view failure as tuition paid for future success. They've learned that every setback contains lessons that compound into better decision-making. This mindset allows them to move quickly when opportunities arise, whether it's a stock market correction or a new industry trend. In contrast, the average person waits for perfect conditions that never arrive, all while inflation and opportunity costs eat away at their potential. Learning to manage risk intelligently is not about being reckless. It's about positioning yourself to win in a competitive economy. Of course, not all risks are created equal. The wealthy perform due diligence, consult experts, and structure deals to limit downside. They might use options trading strategies or limited liability companies to protect personal assets. This disciplined approach turns risk into a calculated tool rather than an emotional gamble. Americans who adopt this practice, starting small with a side hustle or investing in a diversified REIT, begin to see tangible results within months. The key is shifting from fear-based avoidance to opportunity-focused action, which is exactly how the rich continue to pull ahead. Perhaps the most powerful principle the wealthy use is the power of leverage. They rarely use only their own money, time, or knowledge to build wealth. Instead, they multiply their efforts through other people's resources. Banks provide OPM, other people's money, in the form of low-interest loans for real estate or business expansion. Employees and contractors supply OPT, other people's time, so the owner can focus on strategy rather than daily operations. Even knowledge is leveraged through mentors, masterminds, and paid advisors who accelerate learning curves. In today's American economy, leverage is more accessible than ever. Online lending platforms, crowdfunding sites, and even traditional mortgages allow ordinary people to start small and scale fast. Yet most Americans fear debt, because they've seen friends and family drown in credit card balances averaging over $6,000 per household. The wealthy distinguish between good debt and bad debt. Good debt buys assets that appreciate and generate income, while bad debt funds depreciating liabilities like luxury cars or vacations. Mastering leverage responsibly is what turns a modest income into a growing empire. Leverage also applies to networks and systems. The rich build teams, automate processes, and create passive income streams that run with minimal daily involvement. Whether it's a franchise, an e-commerce store, or a portfolio of rental properties managed by a property management company, the goal is freedom through systems. This is why some Americans retire in their 40s while others work into their 70s. They've learned to make money work around the clock, even while they sleep. You can begin leveraging today by outsourcing simple tasks or using free tools to automate your finances. As you internalize these 4 rules, seeing money differently, prioritizing assets, embracing calculated risk, and mastering leverage, your financial trajectory will begin to change dramatically. The American dream was never meant to be a lottery ticket. It was designed for those bold enough to play by the real rules of wealth creation. Start small, track your net worth monthly, identify one asset you can acquire this year, and educate yourself through books like Rich Dad Poor Dad or podcasts from successful investors. The gap between you and the wealthy isn't as wide as it seems once you understand the game. Remember, the rich weren't born knowing these principles. They learned them through study, experience, and sometimes painful mistakes. You have the same opportunity right now in 2026 America, where technology and markets evolve faster than ever. Inflation may be rising, wages may lag, and economic uncertainty may loom, but those who master these unspoken rules will thrive regardless. The choice is yours. Continue playing the old game that keeps you average, or step into the arena where the wealthy operate and claim your share of abundance. Take action today. Open a brokerage account, analyze your spending to free up capital for investments, or research your first rental property. The wealthy didn't wait for permission or perfect timing. They started with what they had and built from there. You can do the same. The hidden game of wealth is no longer hidden once you know the rules. Now it's time to play it and win.